As Susan said, this is a little bit different from what we normally do here because typically we make our investment decisions on a fundamental basis, not a technical basis. And yet we've talked a lot about fundamentals in a variety of our conferences and seminars. So I just thought it would be an interesting difference, at the very least, to take a look at the market through the eyes a bit of a technician. And it won't be 100% technical, but the bulk of what we'll talk about today will be technically derived. And I'll try to go along. I've put a lot of material in the book. There's no realistic potential that I'm going to cover all of it here, but I've just put a number of things in there. I think you'll see the types of graphs and studies they are, and to the extent that we have not gone over some of those things, I think they're there at least for your own review and research to whatever extent your interest carries you. What I've done on the very first page is provide a list of major resources that I employ on a regular basis, and this includes fundamental as well as technical items, but a real quick rundown of a couple of them, or most of those, at least on the daily side. You can see eSignal is the service that we use to get our securities prices and a vast array of statistical data, both, well, primarily in graph form, but also in table form. Ned Davis Research provides a huge amount of the graphs and data that I review on a daily, weekly, monthly, quarterly basis. And the bulk of the material that you see in the booklets is a result of the Ned Davis graphs. Lowry Research Corp does some outstanding work. They've been in business since 1933, and they're one of the top technical services providing graphs, all sorts of data, and their own analysis, primarily dealing with the concepts of supply and demand. The decision point of the first three, by the way, are very expensive. The cheapest among them is Ned Davis, which is about $10,000 a year, and Lowry's is probably $16 to $18 a year, and eSignal is probably $18 to $19 a year. So they're not typically resources that the individual investor employs. Decision Point, the next one listed there, as Susan pointed out, a few of the graphs that are in the booklets today, and I'll mention which ones, are Decision Point graphs. And it is a very, very rich site. It only costs in the neighborhood of $20 a month or something like that. So any of you who are technically inclined, I strongly recommend that you take a look at Decision Point. I also look daily at least at some of the releases from Elliott Wave International. ISI Group does a lot of economic data collecting and presentation. David Rosenberg, former chief North American economist with Merrill Lynch, is now with a Canadian firm, Gluskin Sheff, and provides a daily or near daily economic analysis. Dow Theory Letters has been published since 1958 by an old friend of mine, Richard Russell, back in La Jolla, California. And Richard does daily commentary, market analysis, and so on. And then we've got the two financial TV stations at the bottom, Bloomberg and CNBC. And we keep both of them on in the office all day long to see who's being interviewed. And then you see some intermittent sources on the right: John Malden, Marianne Bartels, Bert Doman. Monthly look at Mark Faber's international commentary. And as time allows, the general publications that you see there, though the bottom two are not really so much general publications, Grant's Interest Rate Observer and Bank Credit Analysts, both of those are terrific publications, but you can't read everything. And so when you find after a while that they go largely unread, even though you love them, you start taking them off the list of things that you put at the top of your desk. So in any case, that's really the source of material that you'll see in here tonight, and the source of material that I tend to review regularly. And just to give you a real quick rundown on the bullish or bearish tendencies of these various entities, I'll kind of run through them fairly quickly, at least the ones I see daily. E-signal is just data collection, so it doesn't have a bias, bullish or bearish. Ned Davis Research is short-term bullish, longer-term bearish. Lowry's is short-term neutral, longer-term bullish. Decision Point is bullish. Elliott Wave is very bearish. Rosenberg is bearish. Russell is short-term neutral, longer-term bearish. And Financial Television, of course, is always bullish. I remember years ago, I was talking to the former editor of Barron's, and he just said to me, we sell more magazines when we say positive things than when we say negative things. So you just, and I can remember hearing, they didn't mean it to happen, and this was years ago also, you could hear it through the headset of one of the announcers, and the producer or somebody in the back said something to the effect of, say it with a bullish spin. And that wasn't supposed to go on air, but it did. Well, in any case, what we've seen recently is a tremendous growth in the markets, in the markets in terms of prices and in the economy in terms of economic statistics. And most of what we're going to talk about tonight is technical, but let me do a quick review of the economic picture first. And if you look to the first page here, the economy is growing. There's no question about that. This is an ISI graph, and they put reams of these together every morning and send them out. And this particular one is a summary of their surveys of companies that cover the full spectrum of the U.S. and world economies. And so they collect data from a large sampling of companies within this broad array of all of our most commonly used industries. And as you can see on the right side of that graph, the blue line has risen quite nicely from a very depressed low, and it's reached a level of 44.6%, which number doesn't mean anything except in the context of the scale. The scale is 0 for the weakest, 100 for the strongest. And this has clearly been a strong rebound from readings at the very depth of the recession. And we're still at 44.6 in a weak zone, even though up very substantially from the bottom. And well below that line that's across here, which is about 55, which is roughly where that index tends to be when economies are strong. So clearly, we're well up off the bottom, but the level is well below what is normal for a strong economic environment. And this is typical of a great many economic statistics where we're seeing growth strong, but level weak. Well, where are we now? The economy's clearly grown pretty dramatically from the depths of the severe recession that ended, we think, perhaps a few quarters ago. Most people are estimating that by the time they come out with a final decision on this, that they'll say that the recession ended roughly at the end of June in 2009. And as the ISI graph shows, most economic indicators are rising, some of them very dramatically, though they remain at depressed levels compared to the period before the recession. Now, internationally, we're seeing a little bit more substantial growth in many parts of the world than we're seeing here in the United States. And that's particularly true of emerging nations. One of the big questions that remains is whether emerging nations, largely Asian, or at least many big ones in Asia, can lead a world recovery, which is something that's an untested phenomenon at this point. We've also experienced the greatest infusion